Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So in today's video, I'm going to look at one of the companies that I have in this portfolio. I've had question mark over this company for quite some time and I just needed to do research, and I want to share with you guys what I found out and everything about the company. So we're going to talk about the financials. We're going to talk about first the business model, like what do they do. We're going to talk about the financials and see what things are basically how the company is performing. We'll look at the valuations, so if it's expensive, it's cheap, and so on. We will look at the total returns over the last 5 years, 10 years, and so on. And then I'll share with you guys what the insiders are doing right now about the company, and then I will tell you at the end what I will be doing moving forward with this company, because I do own it in this portfolio and the family portfolio. Before we do all of that, if you can join us in the Patreon account, that will be absolutely helpful, because you get access to a lot of things, including the family portfolio and so on. Okay, so the Discord is basically also a great help, because there's a lot of brothers who are sharing very good practices about the news that's happening right now. It's stuff they're investing in, whether it's ETFs, stocks, and everything. Just so if you want to join us, basically a community of growing Sharia compliant investors, then of course join us, inshallah. Right, let's talk about this company. And the company we're talking about today is Intuit. This company is a financial software company that develops and sells products and services aimed at helping individuals, small businesses, and self-employed professionals to manage their financials, accounting, and taxes. They have different types of software. So they got personal finance management, which is basically a free personal finance app that helps individuals basically track their expenses, set budgets, and so on, and basically manage their financial goals and so on. They also have a small business software called QuickBooks, which basically helps, which is basically accounting software tailored for small businesses, helping with bookkeeping, invoices, payroll, inventory management, financial reporting, you name it. And they have both desktop as well as, of course, cloud-based solutions, which is good. They also have tax preparation software, which is called TurboTax. This is basically a leading tax preparation software that basically guides individuals and small businesses through the process of filing their taxes. So any individual or any business that own their small businesses, then will go to these companies TurboTax software, and basically helps them basically reclaim or get refunds and things like that. They also have credit and lending services, which is called Credit Karma. This is basically their company acquired not long ago. This service provides a free credit score monitoring system. They also have credit reports and recommendations for financial products such as loans and credit cards. So they recommend it, but they don't, of course, provide the credit cards and so on. And they also have the AI and automation for financial tasks, which is basically kind of helps the integrate AI into their systems and make a bit more automation to financial processes, provide insights, assist users in making data-driven decisions and so on. And they've got they also have what's called the API, which is basically for developers to basically use the platform to extend their capabilities of its software, for example, and that enables basically those third parties and so on. So yeah, the company deals with all sorts of things with regards to software, and that's why it's classified as a software company. So what we're going to do now is just look at the financials, look at the overall where the company is right now and where it's heading. So the S&P 500 is done 24% or 25% or whatever it was by the end of 2024. This company was up only 3%, and this is why I'm looking at it right now thinking, is this actually a good investment moving forward, considering it has underperformed to the S&P 500. Now, your software generally has underperformed to the S&P 500. However, companies like Salesforce and so on has done is basically better than this one. So I'm just wondering what is going on with this one. So let's have a look at a bit more detail about the company. First thing, we're just going to look at the financials, just to kind of basically have a look at where in terms of revenue against in terms of the cost of that revenue and so on. So as you can see here in 2015, okay, we were basically making about $4 billion, and that has increased to right now $16.5 billion in the trailing 12 months. Now the cost of that revenue is very basically small, which is very nice, and this is quite common for software companies because there's not so much overheads. Basically, the gross profit for this company is absolutely ridiculous, $13 billion from that $16.5 billion. So they have a lot of sales and general management side of things, the admins expenses, they've got research and development, and they have other expenses and interests and all of that stuff. And then the bit that we're interested is really this line here, which is basically the net income. So $2.9 billion of basically net income, which is very good. And as if you look at the basic EPS as well, earnings per share, from $1.30 to right now $10.43, which is a massive growth over the last basically 10 years. So now let's move on to the basically balance sheet. We want to see if the current basic liabilities against the assets that the company has. So we can see here total current assets, the company has basically $10.7 billion against current liabilities of basically 8.6. So they can cover easily $33 billion of basically current assets against, let's have a look. Yeah, total basically $15 billion. So 33 against the 15. So basically they got double the assets basically that liabilities and so on. And when we look at the total debt, basically is very, very small. These companies don't really carry that much debt, which is very good. Debt, it can be a horrible thing for companies, especially with high interest rate environment. So that's not a good thing. So this company is basically managed their debt levels very nicely. Now the other thing we can look at also is the basically the free cash flow here. And you will see this company does have a growing free cash flow here from in the millions to right now $4.5 billion. So some of that net income is basically going into this free cash flow, which is basically what we want to see. These companies should be cash flow rich anyway. So now let's look at a bit more information about the company. We already said this application software side of things. Currently trading $600, basically $17 per share. EPS we've already seen 172 billion market cap. So it is a huge company. It has a wide economic moat and the beta is slightly high. Now in terms of PE, we're looking at about 60 right now, which is very expensive. And when you look at the forward PE, is half that, so 32, and the 5-year average basically looking 41. So 41 basically and 32 when it comes to the forward PE and the 5-year average. So right now it slightly seems a bit more expensive than actually where it has been over the last 5 years. Right now it's 25 when it comes to the sector medium. So it does seem a little bit expensive, but let's have a look at it in terms of dividend side of things. And free cash flow we've already seen. So annually you get basically 0.67. So the dividends is not really what you will buy this company for, current yield anyway. But what you would actually want to see is the payout ratio, which is basically very low, 22%. And the annually you'll get $4.16. The 5-year growth rate is basically 14%, and the 12 years of increase in that dividend, which is a really good. 98% in terms of safety. Free cash flow $5.1 billion, and in free cash flow basically the 5-year growth rate about 19%, the free cash flow margin of 31%, which is absolutely amazing. So in terms of dividend, it's very basically small. However, the most important thing is the fact that basically dividend is actually growing massively, double digits, which is very nice to see, and the payout ratio it is very, very low. Now profit margin, return on equity, and return on invested capital, operating margins, profit margins, return on equity, return on invested capital, all of them absolutely fine, nothing wrong with it. They're doing really well in terms of profitability and the management effectiveness, all of that things. And then the net income margin for the last 5 years, we're looking at about 19%, which is absolutely huge. Total return is absolutely amazing, 22%. The revenue growth in the last 5 years, 22%. EPS was about 14%. And current ratio, we've already seen the current liabilities is covered, but basically they buy the current assets, which is absolutely great. Now, if you haven't, by the way, liked the video already, please do so. It takes a lot of time and effort to put these videos together. Now, EPS growth they're expecting to be about 14% next year. Okay, and I think they've already started the fiscal year of 2025, so that's 2026. And then revenue growth for basically the same year will be 12%, which is absolutely amazing. So you get double-digit growth moving forward. Currently, we've seen already the price, and according to Morningstar, they're saying it's 640. So it's around where it is right now, which makes it fairly valued. According to Simply Wall Street, they're saying it's about 31% undervalued. They expect the price to be over $900 per share, which will be absolutely amazing if that happens. Remember, this is estimation, okay? And the tip rank is saying in the next 12 months. So tip rank, what they do is that these two, what they do is they basically average out what the analysts have said. So all these analysts basically they get their price basically target from them, and then they average it out. So right now $743 and then 724. So more or less kind of similar. This one, it says is strong buy, this one says is a buy, so 18% upside, 20% upside, which is absolutely fine. So all of them kind of agree either they're fairly valued or undervalued at this point in time, despite the higher PE that we've just seen. In terms of Sharia compliant, absolutely nothing to worry about, 99%, 4% in terms of interest-bearing debt and interest-bearing securities. And as you can see, they have been buying their own shares, then they started diluting those shares. And basically they haven't bought any shares basically for the last 2 years. So we'll see what happens moving forward. Hopefully we'll start declining, because what you want to see is this basically declining, because that's very important. You don't want to be buying companies that are diluting the shares, but because they have made some acquisitions very recently, they probably started diluting, because they sometimes use stock basically their shares to buy other companies and so on. So that is basically the first part that we want to talk about. So that's the business side of it, financial side of things. Now we're going to look at the valuation side of it. Okay, and the valuation is very simple. We've got the prices from Morningstar, we've got Simply Wall Street Price, Seeking Alpha, the discounted dividend discount model that I use to multiples valuation model, as well as the discounted cash flow model. All of them average out. We came up with $698 per share. That's 600 basically and 17 right now. That's about 13% of basically difference right now. And if you say, you know what, for this company it might be a bit volatile, I want 15% basically, then that means you can get the stock right basically in a few days. If it comes back down, by the way, that's basically about 2% and $593 per share or so. Okay, so it seems a little bit on basically, I genuinely agree with Morningstar valuation, and I actually like what I came up with as well, around the 600 prices basically where the company should be. So right now as we speak, I am not adding to this company, just to kind of give you my view on this. I think I will show you exactly basically how many shares of this company I own right now and what my price is, but right now I will genuinely leave it. If we see a massive pullback in the market, say in the next few weeks or months, basically we see, I don't know, 10% or 5% down or 10% down, then maybe I might be attracted, but basically to actually add to it. But for now, I'm just going to leave it alone, and I'll tell you exactly generally like my opinion. I'll show you how much I'm up and down, and then you will know why I'm saying what I'm about to say. Okay, so let's now have a look at the basically compare with other companies in a similar sort of a software side of things. So all of these companies have some sort of software that they develop that basically other people use and so on. And as you can see here, basically we're looking at total returns in the last 5 years. So $142 per share, basically 142% is what we got for Intuit. The S&P 500 basically was only 82. So we beat the S&P 500, we beat Adobe, Salesforce, and basically the rest of the companies apart from this one here. And if we look at the last 10 years, okay, 676%. The S&P 500 only returned 190%. Which is basically amazing. So they have beaten the S&P 500 massively, and then more or less the same with the rest of them apart from this one here. Okay, again the similar thing. So that is basically one thing, that basically some of the things I want to share with you guys. Now I'm going to show you how many shares of this company that I own. So this is the company that we're talking about. I only have 5 shares, up about 12% or 268 basically pounds. And as you can see, majority of that money is gains, not so much on the FX impact side of things. $546 per share is where they basically my average, and 440 is basically my in pounds, so on. So the issue right now is, because I've been looking at this company for quite some time thinking, should I get rid of it? And basically because it hasn't done anything, I think I'm going to give it a little bit more time. But this is the bit that worried me the most. So this news here, the fact that insiders are selling this. So this guy one insider sold basically shares worth of this much. And then basically there was another one that sold again this much. And I think there was a third person. There was about a few of them that selling it. That is basically 4 days ago. That's 20 hours ago. So do they know something that we don't? Because the growth side of things, okay, and the insiders, maybe they just take him. Sometimes they actually do sell it because they have to, because there was some sort of agreement. If it hits that price, they will sell their shares or whatever the case might be. But in terms of expectations, so next year they're expecting, like I showed you already, about 15%. This year, basically, they're expecting about 14% growth. Okay, so I don't know. Maybe they think the stock is too expensive right now. I promise you right now, I do not know what I'm going to do moving forward with this company, but I will let you know if I sell it. Okay, if I find another opportunity better than basically out there, I will sell it. If I think, you know what, I might give it maybe a couple of quarters, maybe maybe June, July this year, and then see where we go from there. Then maybe I don't know. I genuinely don't. It's a great company. You've seen the financials. Everything looks absolutely amazing, but it hasn't done much. And sometimes I don't like just the holding companies, especially this company. The reason why it's in my portfolio is not because of the passive income side of it. It's because of the growth and the fact that it hasn't done much in comparison to other companies that I have in the portfolio. So I'm going to leave it alone for a bit. I will let you know exactly what I do, inshallah, moving forward. But yeah, that's the company that I wanted to share with you guys. I hope you're enjoying this content. I hope basically that you value what we're doing, and you can join us in the Patreon account where you get access to a lot of things, like I've always said to you guys. Anyway, have a wonderful day. Assalamu Alaikum.